Hey, welcome to the Closing Beat, everybody. Happy Monday, election eve to you. How's it going out there? Hope you had a good weekend. We have a little bit to cover today, but we're recording this because I hope you'll join us tomorrow for our election night stream disaster. Good time? I don't know. We'll see what it's going to be, but we are going to be streaming basically from 8 o'clock until we all get tired, but we're going to focus on finances and the elections. We have an incredible amount of data, all kinds of things we're going to go through. We're going to hang out. We even have a special guest. I believe Mr. Josh Scanlon is going to be joining us as well. And he's always a good time when you get him on politics. But my focus will be, and Eric's focus, Chris's, and Haley, our focus is going to be on really, all that data, right? So, you can vote however you got to vote. We'll see what happens and who wins and all the chaos, but there's a lot to learn there. So I hope you will join us for that. That'll be tomorrow at 8 o'clock. Quick shout out to James I. We got him on track to have his emergency fund filled up in the next 3 months, whereas he was thinking it was going to take him to the end of next year. A little bit of strategy there. We helped him speed things up there. So if you like that kind of wealth management help, financial services and all of that stuff, jazzwealth.com. Check us out, schedule a call, or open or transfer an account. Let us take a look. All right. Here is the old stock market. And I'm going to do one other little thing here while we're doing this because it's almost the end of the day when we're recording this. The S&P currently is down 0.12%. Right? And basically all day, it's like, down just a little. It would go down like maybe 0.5% or not quite 0.5%, and then come right back to 0.14%. And then it would go down a little bit and then 0.14%. It started the day going up a little bit. And where did it go back down to? 0.14%. Why is that number so relevant? What on earth is going on over there? Well, we had a little fun with this. If you look at the S&P 500's day before the election returns, do you know that the average is a loss of 0.14%? Isn't that fascinating? So here's each year going back to 1960. You can see that for the most part, they are pretty muted days, 0.5% plus or minus, with a few exceptions to the upside and the downside, of course. But the average is basically a wait and see type day. What do we have today? Like literally as I'm looking at this, we are down up here, 0.14%. It is right spot on, and we're basically about to close here in the market, so we'll see what happens. Isn't that cool? The algorithms know that. They know where to position before the election. They know they can run the same data that we can. So pretty cool there, in my opinion. And so that's the S&P. Okay. In our Notes from Jazz, it's an email that we send out, and we have it all archived on our website. If you do join us at Jazz or transfer an account, you'll be able to see literally hundreds of them, but they're in chronological order. And so this weekend, one of my focuses was that the S&P is beating the S&P's returns. You know how they say you can't beat the S&P, don't even try. Well, you definitely, other indices beat the S&P on average than the S&P, right? So it's like not even an argument. Not the Dow. But so in the Notes from Jazz, I go, hey, the S&P is actually beating the S&P's returns. What does that mean? Check this out. So here is, and I'm looking the light gray. It should be gray on your screen there. This is the average performance of the S&P all time, right? Since 1929. The average one-year performance of the S&P, again, average, is 11.9. The average 2-year return, 10.7. The average 5-year return, 10.5. And this is, of course, annualized, right? And so that's where that's just the data. That's not my opinion. Now, the S&P over the last year, we're up 38%. We are far outpacing its average. That's okay. That can happen, right? You have to have some big years and some big down years in order to have an average, right? That's how we calculate it. Well, the average 2-year, we're doing 23.3, meaning 23.3 a year over 2 years. We're at 15.3 a year over 5 years. We're outpacing the average. So in this really, really short amount of time, relative to a longer-term investor's time horizon, we are outpacing the average performance of the S&P. Historically, that has led to pullbacks, not crashes, not collapses or the end of the world, but historically that has led to pullbacks. So thought you might like to know that. All right, let's go on over to the Dow. The Dow is going to be in the news here, so let's talk about that for a second. The reason it's in the news, well, the news seems to only want to cover one thing here. Intel is getting kicked out and is going to get replaced by NVIDIA. But there's other changes going on too. So, for example, Sherwin-Williams, right? No, we're going to go back here. Sherwin-Williams is taking the place of Dow Chemical, right? Not the Dow, right? That's happening too. That's almost not even being talked about. So we have two replacements in the Dow. Now, what's fun about this, I think it's kind of fun. Intel. Oh, we can actually show it. So Intel was up 900% in the 5-year span before being added to the Dow on November 1st, 1999. It did ultimately go quite a bit higher during the dot-com boom and bust there, right? But really, the price pretty much stabilized in there, and Intel sort of lost their way over the last couple of years, and they're getting the boot. Now, does that seem impressive? Like, do you go, oh, it was up 900%, and then they added it to the Dow? I mean, it's kind of impressive, but over the last 5 years, NVIDIA is actually up 2,500% and now getting added to the Dow. So what do we expect now out of NVIDIA? Does it turn into that somewhat slow and boring price movement type stock? I don't know. We'll see. Not my place to judge there. We will see, but that has a little bit of a history to it. You got Sherwin-Williams. Like I said, they're going to be replacing Dow Chemicals in the Dow. Sherwin-Williams has been doing really well in their last earnings report. Talking about a little softness in the DIY, but you know, what's happening. Well, kind of expected. Looking around, the Russell 2000 is actually positive on the day. Managed to hang on to basically its positivity all day long. Gold, if you're really afraid to do anything, you got Bitcoin over here down 2.5%, just pulling back inside after having a pretty nice run there. And then bonds. Bonds will be the last thing that we'll talk about here. Ta-da! There you go. Nothing, man. Rates moved higher, and even though today they technically moved a little lower, they're kind of stuck at the upper end of a range here. It's a little bit difficult. Oil is the exciting area to look today. It was about 3%. All right, let's take a look at some stocks in the news, and then I will just remind you one more time. Election night. Come hang out with us, right? Get rid of all the other garbage out there. Come hang out with us and see how we handle all that data and fun. We are definitely going to be a little bit looser, I would imagine. So, you know, it's going to be live. See how long that lasts. All right, let's look at Apple. Warren Buffett, Berkshire Hathaway, sells $15 billion worth of stock just in the third quarter, by the way. He now has over $310 billion in cash. Okay. How much cash you got on the sidelines? Right? Everybody wants to chase when they find out, oh, Warren Buffett or his company bought something. You know, the stock tends to have a good move. But when the man wants to raise cash, what are you doing? You going to follow that side of it too? I'm not saying Apple's a bad stock. I don't think he is either. I think he just wants cash. Hey, Chubb is an insurer there. They're going to lose about $300 million thanks to Hurricane Milton there. Chewy.com, yay, it's a stock that we happen to own. Chewy.com is going to replace Stericycle, SRCL is the ticker symbol, in the S&P 400 because, well, you know, they're basically done there. The deal is almost done. New York Times reported earnings there, and they did come in better than expected. The digital subscribers is where we missed there. It was only up about 12%. We were expecting, I think, 14 to 17 last time I looked at that, was just a couple days ago. Anyways, so that's that. And then other changes, Vistra is going to be getting added to the utility sector, by the way, in the Dow Jones utility sector. So there's that. And, Yum China. I used to like this stock. Yum China is, they had their earnings come out there better than expected. They are in the process of buying back shares and paying dividends, of course, much higher dividends than they used to. They said, we're going to increase that by 50%. And what do we know? We know that when we're in this type of economy, if you return cash to shareholders, you get rewarded. Hey, tomorrow we have earnings from this is probably going to get the most attention. SMCI, after all the chaos they're going through, I wouldn't even want anything to do with that. Like if you're a trader and you want to play a little bit of a lottery game, maybe, I don't know, but I don't know how you even look at that. You got Archer Daniels coming out, Marathon Petroleum, Yum America, Microchip, and then SMCI coming out. Your worst performer out of all of those is Actually, I didn't mention Cummins. So they're going to report. That is technically the worst one. They'll report in the morning, and it's down 6 of the last 8 earnings reports. Your best is Marathon Petroleum. If you're just looking at just the stats, I know it's not the best performer, but it is up 5 of the last 8 earnings reports. Yeah. Just double checking, looking around here and see what we got. International Flavors they're going to report too, actually. They'll report after the close. They're on a streak of losing 6 in a row. So 6 earnings reports in a row. This stock has moved lower the next day. They report after hours. So that is that. As we wrap it up here, I'll just point out the S&P. Oh, a little bit of a little sell-off there, slightly above average decline. Remember, if you didn't do much today, you didn't have anything to really add to position-wise, or you weren't excited to do anything, just know it's the day before the elections, right? The options market, if you look at the S&P Futures Index, it is actually pricing in the most volatile day in history tomorrow. No, the day after elections, right? So we'll see. Everybody's just kind of sit back and waiting, and we'll be here. So feel free to join us for the election night special there. That'll be the last time I'll bring it up to you. Also, we should have put Josh in there because Josh Scanlon will be joining us for a little bit, and let's have some fun. We'll be doing polls. We'll play some games. We're going to have live bets between the office here. So we'll just make fun of a night that's usually pretty emotional for people, huh? Let's have a good time. All right, thanks for watching. We'll see you tomorrow. Adios.